Okay, good morning, all of you, and thanks for joining in for this session, Business Controlling with SAP. I'm sure this session will be very useful to all of you. But any session is useful when it is interactive, when you also get involved. So I will encourage all of you to ask questions, or if you don't have questions, share your experience with controlling, and especially controlling in technology. I think that will be wonderful. And what I will do is, after a few slides, I will pause and I will open it up for all of you to speak so that there's better balance between what I have to speak and what you have to express. Okay, so I'll just share my screen and then we go forward. I hope all of you are able to see my screen now.
Yes, sir, we can see.
Okay, fantastic. So I'm going to talk about business controlling with SAP, and there's a lot of changes that happens when SAP gets implemented, and with S/4HANA get implemented and new technology tools coming in, controlling is changing. And so that's where I feel this interaction will be very useful on a Sunday morning. So just a few minutes I'll spend about myself and what I do, so that at least it will help you understand. So I'm a fellow member of Institute of Cost and Management Accountants of India, and also hold the COP, Certificate of Practice. I've done CFA from ICFI, CISA, CIA, PMP, and then finally I did UCLA a few years back. That's their executive MBA program. And after that, I did pass my registered value exam. So I also practice as a registered valuer. I've trained, more than 200 finance professionals in SAP Finance and Controlling module. It's a passion that I have, which I'm carrying for last over 24 years. I started working on SAP when I joined General Motors, which at that time was world's largest corporation. So it had at that time 100 billion plus kind of revenue. Now its ranking has come down to I think 10 something. So which is where my experience started, and it was a very hands-on kind of experience that I had in every area of finance and controlling and integration. So that's where my schooling was, in finance, in processes, and in SAP. And after that, I had opportunity to work in other corporates like Shaw Wallace, Bayer Crop Science, Colgate Palmolive, so IBM, General, and lastly it was General Mills where I worked. So in this all corporation, I worked in SAP environment, either as a manager, power user, or as a SAP consultant. In General Mills and Colgate Palmolive, I worked as IT manager, and I was managing global teams in data analytics and SAP. So it was wonderful experience working on domain experience plus technology, and I'd say it was very enriching experience. So what I do besides valuation is financial modeling, and I also train professionals on SAP. And I also do this kind of webinars so that I can also help others to at least get a good briefing of SAP products and SAP's capabilities. So the program that I run is designed specifically for working professionals who would like to have a practical and hands-on approach rather than theoretical frameworks. So which is where we are given access to SAP S/4HANA and also ECC IDS system. So we work on both the systems so that the participant get experience in both the system, and the classes are also held late evening so that it suits the working professionals, especially 9 p.m. kind of time, so that everyone is at home from office. And it cover FICO integration. So FICO integration with MMPP and SD, which has been my strength all these years. I've worked extensively in the integration, and which is what makes SAP such a strong product It's because of its integration and its capability to automate. And then the new general ledger, APAR and asset. Fortunately, I have had experience working on the finance side as well. So I understand and I have quite good expertise in the finance. So I can talk about finance along with controlling quite easily. And then the entire controlling suite and the system design space. All this is covered with transactions, master data configuration, and SAP tables. So practical hands-on experience with a live project, focus on developing skills rather than making presentations. And even in today's session also, we will do some hands-on so that you can see SAP and you can see some of the things that I'm talking about. It's a 5 weeks program, 4 days, and 9 to 11 p.m. That's the timing we kept from a working working professional perspective. And if at all you want to get more information about myself, then you can go to my website. You can connect with me on the LinkedIn. And these are 3 areas where I operate: business valuation, analytics, and SAP training. So this is a page where you can get all the information that you require, the program details, registration for the program, the program video, which is a sample drawn from the actual program. And then if you want to learn more on SAP, then you can go through this video. There are about 10 videos which I have put, and you can provide me feedback. And if you are interested in looking at certification, you can get more details here. So there's a lot of information that I've put in that will help you in your learning journey with SAP. Okay, so let's then get to the core of our today's session, which is on business controlling with SAP. And as we all know, controlling involves you need to set up some standards or some baseline or do some planning, and that becomes kind of comparison point for you to compare with the actuals. So that's where you will measure performance. You'll compare actual with established spoken standards, take corrective action, and use information gained to set up future performance standards. That's the controlling role, put theoretically. But in real life, it does involve a lot of data crunching. You have to first do big exercise in financial planning and analytics and analysis, set up the planning process across the organization, not just finance department, to do a lot of cost allocations from one department to another department to find out the departmental cost, do a lot of work on the cost controlling, which is again very data intensive. Product costing, especially in a manufacturing company, it becomes extensive exercise, pricing and management decision making. So that's where systems play a big role because it's so data intensive. And with system coming in, many of the work that was data intensive is now reduced, and which is where comes the opportunity for us to add more value to controlling function. And so in the next 2 slides, I will show you excerpts from Deloitte Report. So Deloitte has done a study on the future of controlling by 2025. So they have said there are 4 areas where the controlling will be working on. One is partnering with the business, so where there will be more proactive and measure-oriented decision support from controlling. So they will partner with the business. Second will be provider of digital controlling services. So more and more our services will become digital. And then orchestra of group-wide data governance. Data governance is now growing in importance. You will see a lot of use of this word governance, and data governance is very important in a SAP environment. And then enabler for emerging businesses. So business models are changing with technology. What was brick and mortar earlier is now becoming digital. So the models are becoming digital. Controlling becomes very different than what it was in a brick mortar scene. So that's where the 4th point. And how does the future of controlling looks like? Some of the points that they mentioned, but if you see through you'll see a lot of points where the technology or automation is involved. So new technology will automate many controlling services. And then digital controlling services will emerge, while self-service with the right time decision support will become the new norm. So self-service is now growing, which is where the end user will have all the tools and technologies which will make them self-sufficient. And standardized processes, controlling access data is evolved. So we as a controller will propagate more of data across the organization by partnering with business. That's what you can read through this when I share the presentation, but that's what Deloitte is envisaging, and they have done this outcome of a big exercise which they have done. So there will be a lot of credibility to it, and you can also search for this report and read through the entire report. So no doubt, technology is disruptive. It has disrupted many things around us in last 20 years, at least. Since I started my career in '91, I have seen this happening. I worked at a time when books of accounts were handwritten and they were more paper-based. And from there, I've seen it evolving, and so I've seen all this disruption which has happened in last 2 decades. But then it has also created a lot of opportunity. Personally, it has created a lot of opportunity for me, and I've seen it for many of the professionals. We have, instead of being dogged down, we have taken bull by its horns, and that's where I feel is the opportunity. We should learn technology to the extent it is needed for us, and that's where SAP also comes into picture, because in any enterprise that you do controlling, you will have SAP playing a major role. I'll just mute everyone for the time being. You can unmute when you've got questions. I'll stop after 1 or 2 slides, so you can ask me questions. So SAP is actually off-the-shelf software. It is not built grounds up by any of the programmers. It is sold by SAP AG Germany as a off-the-shelf product. So you go to a shop and buy a product, is the same way you buy the entire ERP, and then it is configured and set up as per business requirements. But if you are just selecting the standard functionality, it is just few days you can make SAP run in your company. It doesn't take much time. Of course, you'll have to do a lot of testing. You'll have to do a lot of data transfer activities, which is where a lot of time is required. But standard SAP is ready to be implemented in a short time. That's the capability of SAP, and which means a product like SAP caters to all the companies across the industries. It doesn't matter what industry they are working in. So it is the same product that can be set up for any company in any industry in any kind of product or services. So that's the capability of SAP, and which is where the standard SAP comes into picture, and which is very solid option for enterprises that don't want to spend on customization. Just adopt SAP business practices, and you are up and running in just a short time. From a controlling perspective, 3 areas that I'm going to talk about today, which are very important in a SAP environment, but there can be many more. Right? Because of paucity of time, I will just look at these 3 areas. And for system design, integration, and governance, which is where we'll talk about in this session. So any question before I go forward? Of course, there are more slides to come, but just on these basic things which I talked about, or anyone wants to share experience, can do it. There are a lot of experienced controllers who are working on SAP or maybe non-SAP system. Okay, so I'll continue, and we will, whenever you got question, we'll see. So starting with the SAP design, this is one slide which I always show it in all the webinars. so that you can relate SAP design with something in the real world. And all of you, so all of us have played with Lego toys. And if your children, kids, they are also playing with the Lego toys as square or rectangular pieces of plastics, and you connect them to build shapes of many varieties. They can be house, can be hut, bungalows, apartment. So with the same set of Lego toy pieces, you can build different types of houses. So SAP is also very similar. That way, SAP has given you kind of those pieces, just assemble it and it is ready for your kind of company. So, which is where I've given this example for you to relate it. And that's where, there's opportunity. From a building block perspective, I'll say client is the first block, second is enterprise structure and configuration, third master data, fourth the transactions and the transaction level controls, various modules, and then the business processes which are made that uh, goes across or that ties entire SAP together. So that's what I call it, like building blocks, and which we'll talk about in this session. And one of the tips that I always give to those who are new to SAP is just think big. Think of global enterprises. How do they manage their businesses? Or because if you think of a very small size company, then perhaps while SAP can work in that company, but many of the functionalities in SAP will not make sense because SAP is one product that can be used for Fortune #1 company. It can also be used for a 100 crore company. So it doesn't matter. This is another diagrammatic representation of the components which I talked about. So client is like sitting at the top and it controls the entire SAP installation. And then below them, below the client is the enterprise structure. So you can call it like a company code or a plant or a sales organization, all enterprise structure. And then the configuration, which is where you do settings and set up the system. So these three things together forms the customizing that data. And then the master data is something which all of you are very well aware, like customer data or the vendor data. And then this is the transaction level data, which is where the business processes operate. So business process, it ties up different modules within SAP. So SAP is very modular in structure. So just like in your organization, there are functions. You may have a finance function, controlling function, sales and distribution, metals management, quality, and so on. So similarly, SAP is designed modular at the bottom level so that it can cater to each and every function in the organization. So finance has a different requirement compared to sales and compared to production department. So there it is modular, but then SAP has the integration through business processes where the data transfer happens and it works together. So just taking a bigger picture of controlling, can you please put yourself on mute if you're not talking? So just taking a bigger picture of controlling, think of very large size companies. Can think of Reliance Group or Tata Group from India, or Procter and Gamble or IBM or Colgate Palmolive or Unilever kind of the world. So how do they manage their businesses, and how does SAP comes into the picture? For most of these companies, they have SAP implemented. So you can think of like IDS is one of those companies, and you're sitting in the headquarter, and that's like at the client level, which is below that will be various regions. So most of the global companies, they are organized by regions. So you may have Eurasia or North America or Asia Pac region, or China or uh, Southeast Asia. So there are many regions depending upon the operations of the company. And within the region, there are countries, and within the country, there's company codes. So this is the enterprise structure in SAP. So from the top to, you keep defining to the bottom-most level. And within the country, you may have functions. Within the company code, you may have functions like customer service, production, finance department, and there will be employees in those functions. You'll have head of department. So there'll be cost centers defined in this. And then within the country, you will have different divisions that sells the product of the global enterprise, maybe pumps, paints, pharmaceuticals. They are like divisions, or you can also define it like a sales organization. One or combination of these divisions can be defined as a sales organization. And then within that will come the plant, which manufactures the product or which stores the product, and which is where you do the valuation or goods movement. Within the plant, you will have a warehouse where the goods are stored. Within warehouse, you will have storage locations, bins and racks where the individual product is stored. So at that level, whenever an individual product is moving, so for example, if there's a plant in Pune location, and in that plant, there are a couple of storage locations. Within that storage location, there is a warehouse, and then that warehouse is a bin and rack, and the product from that bin or rack is moving out, and either it is going to the customer or it is being scrapped out. The data gets rolled upward to the extent that someone sitting here will be able to analyze that data. And so while the data is consolidated at this level, it is also granular. So from that consolidated level, from the controlling area level, you can also get down to the storage location and to that specific product. And I will demo that to you to help you understand this. So how powerful is SAP, and how does a global enterprise can get connected? So when it can work for global enterprise, definitely it can work for any other enterprise. There are other design elements also, but I'll take a pause and I'll check if you've got any questions. Even if you have anything to share, please do not hesitate to share.
Hello, Rajendra Joshi here.
Yeah, Rajendra ji.
Yeah, how Business One is different than SAP HANA?
Yeah, so SAP acquired Israeli company, Business One, a few years back, and which is because SAP wanted to also focus on SMEs, small and medium enterprises, which have less 100 kind of a turnover, 100 CR kind of a turnover. So Business One is a product which can cater to a much smaller organization, which will have a lesser maintenance cost, can be implemented much faster. SAP, the product that we are going to talk about today, is an ERP, and it can be implemented for the kind of enterprise which I had shown you in the slide, or it can also be implemented for any other company. But the maintenance cost and the licensing cost of this product is definitely much higher compared to Business One. I've also worked on Business One, and it is a very robust tool. Any small size company can implement, and it is also very well integrated. It has also got very nice graphical user interface and user interaction. So it's a very good product.
But are the all these functionalities are available in Business One?
Not all. For example, production planning is not so extensive so not production planning, but I would say product costing. So in SAP ERP, for example, you can do very extensive standard costing and many other product costing related things which you can't do in Business One.
Okay.
So there are many things which are not there, but then in a smaller kind of an enterprise, you don't need such an extensive kind of a product, and which is where Business One comes into picture.
Okay.
So if you are working in an enterprise that does not really require extensive product, then you can go for Business One. It is good to, because Business One is also quite scalable, and it will also work for you. Till the time you come to a point where you think that SAP will be better, SAP ERP will be better, you can continue with Business One.
Okay, thanks.
Yeah.
Thanks for
I
the
also think of security, for example. Security in ERP is quite extensive. The roles that we can define can get down to the field level. But those kind of extensive things you won't find in Business One. But I would say it is okay. A company which is 100 crore or 200 crore would not like to anyway have such extensive functionalities.
Okay, thanks for the clarification.
Yeah. Thanks for asking this question. Good question. Many times we miss out because there's so many products that SAP is launching, like S4HANA and ECC is also, there's a lot of confusion. What are these two products? So we'll try to also clarify that. Okay, so let me continue forward. So there are, besides what we talked about here, enterprise structure, there are other design elements which are important from business controlling perspective. There are many times I've been interacting with many controllers, cost accountants. So they would tell me that they want only training in product costing or cost controlling, or especially to COPA. And I would tell them that SAP is not something that you can just learn a piece of it. You have to learn the entire, because it's like a business. And which is where the learning finance is equally important. And if you are working on S4HANA, the way SAP is now going forward, it is kind of merging these two things gradually. And a lot of part of controlling is now getting merged with FI. So one of them is the cost element and the primary and secondary cost element that we had earlier. So the new ledger is another functionality which SAP is growing over last, I think, 10 years. And in S4HANA, it has done much extensive work on it. So basically, new ledger is where you can accommodate multiple regulatory requirements. So you may have reporting requirement for Companies Act, Income Tax Act, US GAAP, and so on. Now, in the earlier system, or in any other system that you work on, you will have just one ledger, which can cater either to a Companies Act or to US GAAP or to Income Tax Act, but it cannot cater to multiple regulations. With the new ledger, what SAP has designed is a leading ledger, which will cater to one baseline regulation. For example, if it is an Indian company, then Companies Act. If it is a US company, then US GAAP. And besides the leading ledger, you can also have the non-leading ledgers. So non-leading ledgers can cater to the local requirements. For example, Income Tax Act requires you to have depreciation by block of assets concepts. And for cost accounting, you may like to have a different way of presentation. So you can have different ledgers defined. Earlier, these ledgers were very isolated. Now what SAP has done is it has linked it with controlling. So if you have got these three ledgers, data from these three ledgers can also flow into controlling in three different versions. So you can do controlling based on all these three ledgers. Earlier in controlling, it was only the base ledger data that was flowing. Second is that in asset accounting, for example, when you have to calculate depreciation, now you can also have data flowing from multiple ledgers. So that is another beautiful piece of this design. And from a controlling perspective, these are very important aspect. The next is fiscal year and chart of account. So fiscal year is basically the accounting year. So many companies will have April to March in India. Most of the, or large number of multinationals, they have Jan to December as their fiscal year. So fiscal year will be a year for which you would like to draw out your financial statement from a regulatory perspective. So everything in SAP, in all the modules, sub-modules, gets accounted based on fiscal year, so that you can finally draw out your financial statement. And from a controlling perspective also, it is very important, because if you are say doing multiple company code controlling, For example, your group has got multiple company codes and you are doing company code, you're doing controlling for a couple of company codes taken together. Then you will have to ensure that the fiscal year is defined uniformly for all those company codes. That's one thing which is to be understood. That's where it is to be designed. If that's what you want to do in controlling, multi-company code controlling. The chart of account similarly is now growing extensively. Like I've said, the primary cost element in FI and CO has now been merged into GL. So the chart of account has now more features where it controls the flow of data. So that's whatever gets accounted in chart of account does not remain within FI. It flows from FI into cost center accounting, product costing, COPA, profit center accounting. So this is the whole flow which starts from FI. And from a business controller perspective, it's very important to understand the chart of account, how different accounts have been organized, have been designed, and what are the different control features in each of these, and how the value is flowing. Because when he's looking at his cost centers, whatever he sees in the reports are all coming from the chart of account. The account group further classifies the account into categories. SAP has extensive currency accounting. So you can have a document level currency, you can have a company code currency. So for example, in India, your company code currency may be INR, but you can account it in any currency. Can be euro, can be baht, or dollar, or any currency. So, and then from a controlling perspective, you can also have a controlling area currency. If your organization has regional setup like Southeast Asia, and where the Southeast Asia headquarters is in Singapore, so they would like to see everything in Singapore dollar, not in Indian rupee. So while your document is getting accounted in US dollar and company code is in INR, your regional controlling is happening in Singapore dollar. So on real-time basis, SAP will translate all this into controlling area currency. Now think of the headquarter, which is in, say, Germany, okay, and that is using euro, and they would like to run reports in euro. So for any document that is getting posted in India in, say, US dollar, getting accounted in INR, is seen in Singapore dollar, can now also be seen in euro. So that is the beauty of the system. It can handle multiple currencies, both from an accounting perspective as well as from reporting perspective. The other thing about SAP is the multiple valuation, which is very useful for controllers. In a setup where you have got large number of company codes, presumably there will be a lot of intergroup transactions. One company code selling to other company code, or one profit center selling to other profit center within the group. So the legal requirement is different compared to the internal group requirement. So from a legal valuation perspective, you'll have to add a markup to those intercompany transactions so that you can comply with the transfer pricing requirement of the arm's length distance transaction processing. But then from a group valuation perspective or consolidation perspective, you don't want to take the intercompany transactions. You would like to eliminate it. You would not like to take the markup. So that's where the second valuation comes, which is a group valuation. And you will prepare your group level reporting, excluding the markup and excluding the intergroup transactions. The third valuation is within the profit center. So it is quite possible that you may have multiple profit center within one company code, or one profit center that caters to multiple company codes. And also one profit center transfer goods to another profit center. Now within the organization, it is possible that the management will sit and decide at what price should one profit center transfer to another profit center, so that there is a notional revenue available for the selling profit center, and so that has to be accounted as a cost to the receiving cost center, profit center. And this will help to find out the ROI by different profit centers. So profit centers are like strategic business units. So you may have divisions within your company. So each may be a profit center or a SBU, and you would like to find ROI. So this is where the profit center valuation comes into picture, which will consider transfer pricing between the profit centers. So that way, SAP can also be set up for multiple valuation perspective. And then the field status group will control at the transaction level when the data entry guys are entering the data for invoices, or they're preparing sales order, or preparing billing document, or they are making consumption entries in the system. There'll be controls at the field level so that they don't end up wrong values, or they should not enter into a wrong cost center or wrong profit center or wrong business area. Otherwise, the reporting will go wrong. So which is where there are many configurations in SAP. One of them is field status group that controls the screen. And then there are also validation and substitutions and user exits that complement all this to build a better control system. Okay, so before I move to the automation side or the integration part, any questions that you have? Okay, so then let's move to the second part, which is the integration and automation capabilities. And like I've earlier said, the strength of SAP is its capability to integrate and automate business processes. So the processes within SAP are tightly built, and on top of it, there are roles and responsibilities defined, which will ensure that whatever one person is entitled to do, he only does that part of the business process. So there's a modular structure built by different functions in the organization based on the requirement of those functions. And those modules cater to those. For example, FI will cater to regulatory requirements, CO will cater to the internal income statement or decision-making requirement of the management. All transactions across all modules with monetary impact post automatically into finance through automatic account assignment. So this is what is set up in the configuration, and which is where business control will also have to play a role to make sure that the data flows from the PP, MM, and SD module in the right way into FI and into CO, so that later on when he is running the report or is analyzing the data, he is very sure of the data itself, base data itself. So, in a typical SAP setup, my estimate is that 60 to 80% of the data in a P&L and balance sheet comes from as PP, MM, and SD. It's a huge data that flows from integration. Even doesn't matter accountant is in office or not, or sleeping. System keeps posting based on the transaction that happens anywhere in the world. Okay, so that is the power of integration. And those of you who are working global enterprises, they would understand how capable this kind of is. And so data from SDM, PP, PM, PS, and other modules can also post to CO to determine profitability of operations. And since all this finally determines the profitability, business controller has to be involved in the integration to make sure that it is very well designed and executed. So business processes, like I've said, integration of various modules give rise to these business processes, and it is very tightly set up based on roles and responsibilities in the organization using SAP security tools. There are 4 key processes I'm going to talk about. Doesn't mean that these are only processes. Within these processes also there are many scenarios, and also there are number of processes which can be built based on the requirement of the organization. So procure to pay is a very simple process, starting from purchase acquisition, going into the creation of master data for the vendor, and then receipt of material. At that time, when the warehouse person is receiving the material into SAP, SAP will automatically pass accounting journals. So there will be document created for the warehouse and document created for accounting as well. So debiting the material account or expense account or the asset under construction, depending upon the nature of the transaction, and crediting a liability account. So the liability is immediately accounted the moment goods is received in the warehouse. And then when the invoice is received by finance, they will have to do Mero. So they will be processing invoice with reference to the goods that has been received. So the three-way check is there. You have to check with the purchase order quantity, price, and the good received, so that there is no variance. Or if there is anything additional posted, then it goes as a variance, or even SAP can give an error and stop any extraordinary transactions. There's also a process that you can set up merging Miro and Migo, so that when the Migo is done, at a time invoice also gets posted, and then it will send message to the accounting team, and accounting team can verify. After which it is ready for the payment run based on the payment terms with the vendor. The order to cash is a similar process as procure to pay, but it is for the customer. So receive order from the customer, then there's a checks done for the credit worthiness of the or the credit limit that is given to the customer. Then there are check for the availability of the inventory, metals it picked up. These are all part of the sales process. And then someone in the warehouse will post a good issue. This PGI then converts into an accounting document, debiting the cost of goods sold and crediting finished goods. So this debit to cost of goods sold happens at the standard cost. And this is the standard cost which is determined through the standard costing process, which is again a lengthy planning process within SAP. So where the controller team would have already defined the cost, and that's the cost which is debited here in the cost of goods sold and gets into the FI. And then when the billing happens, customer is debited, sales is credited, and GST also gets credited. So tax liability is created there. And finally, you receive payment from the customer and you do a clearing. Plan to produce is based on the order that you receive from the sales department. Production department will plan the production. So production orders are created for each of those lot of production, and to those production order, raw material, packing material are issued. And when these are issued, there's an accounting entry that is passed automatically by debiting consumption and crediting the raw material or packing material account. And then the semi-finished goods consumption also happens. So semi-finished goods account is also treated in the same manner. And during this whole production order processing, activities are consumed like machine hours and labor hours, or if you define activity in some other ways, it gets consumed. At that time, again, there is an entry that is passed with FICO integration. And finally, when the goods is produced, at that time, the goods is received in the warehouse using Migo, and finished goods stock account is debited, and credit is under the cost of goods manufactured account. And this data then flows into finance. And then the record to report, we have talked about all these business processes. So these all business processes are integrated with the FI module. FI module itself comprises of 4 major sub-modules: accounts payable, account receivable, asset accounting, and the core is the general ledger. General ledger is linked with these 3 subsidiary modules: AP, AR, and asset accounting. So whenever there is any transaction happening in AP, AR, and asset accounting, general ledger gets updated. General ledger also gets updated from these business processes, and general ledger is also updated with any direct entry that FI department does, for example, provisions or accruals or any adjustment entries. So once all this is complete and the month end is there, you can now draw out the final P&L and balance sheet. But the P&L and balance sheet is available anytime you want to, draw out. It is 24/7. You can see the P&L and balance sheet. So which is a very powerful tool. You can see how the P&L is developing over the whole month, and if there are any abnormal entries that you see, you can get into those entries and you can get it corrected before it is time for you to prepare the final P&L and balance sheet. Similarly, in CO, during the month end, this data keeps flowing on in from business processes and FI to CO. There's hardly any work to be done within CO because of all this automation, except that you are monitoring and seeing whether any abnormalities is there, things are going on as per plan. And at the month end, there'll be activities for settling the production order, checking whether all the billings have been accounted, and also making sure that various allocation cycles have been run, executed. So once all this is done, the cost flow is complete, and you can then run the contribution margin report and you can do your analysis and also present the report to the management. Now, as far as the CO reports are concerned, it is also available real time without some of these adjustments. So you can use those reports for your daily monitoring. You can monitor the contribution margin at different levels based on how you design your income statement report. Okay, so before I get into this governance side, any questions so far on these topics that we have discussed? Yes, I think Sankar ji is raising his hands. Do you have any question? Yeah, please go ahead.
Mr. Jayesh, this is Shankar from Bangalore.
Yeah.
Thanks for the very valuable learning so far. I have a question in respect of cost, overhead absorption. How frequently we need to revisit the cost sheet for the overhead recovery, and how do we reconcile whether all the things are, recorded in one or the other place, said that nothing is left out from finance perspective in the product costing point of view?
So there are two parts to this question. First is how frequently you do the standard costing, and second, reconciliation.
Correct.
Okay, so to answer the first part, the frequency of standard costing depends on the industry your company is in. For example, if you are into metal industry where the price is tagged to say LME and it is always very volatile, price keeps on changing, they revisit their standard cost more frequently, maybe a month or really minimum, I think it is a month that they will revisit. But for other companies, it can be a quarter or it can be even a year. If your costs are stable and you don't see much of volatility in your raw material prices, then it's better to keep the standard cost throughout, because when you do your planning, you've done it for the whole year. So standard cost also you'd like to keep it, but again, like I said, it is very situational. Take a situational call rather than go by any benchmark. There's no benchmark like you should do it so regularly. It depends on the kind of industry you are in and the variances you see. See what happens when you look at the variances, you will see whether the variance is within the control or not. If it is within plus minus reasonable limit, then you will be comfortable with it, and because then it's part of any organization's life. Some fluctuations will happen in the cost compared to what it has been planned. The planning happened 1 year before the actual execution. So quite possible that there will be variance, but there should not be any abnormal variance. So any abnormal variance should be corrected, but otherwise, normal variance is just part of the life. Just take it ahead. Don't make too many changes, because then your analysis also becomes complex. You'll have to remember, okay, when did you make your last change? What was the price earlier? Okay, there are reports that can also help you, but you are just making your life more complex. I think from a value added perspective, it doesn't add much value. It adds more value if you do better controlling, right? So I feel that's my take. And then second comes the reconciliation. See, the way if you are setting up SAP right, then there might not be any need for reconciliation because all these transactions they get recorded automatically. There are few items where there may be some differences between FI and CO, which so example, if you think from a revenue perspective, there will be difference in the revenue accounted. In FI, the cost and revenue is accounted from the billing from the transactions that gets executed. So I talked about two transactions. One is the post good issue and the billing. Okay, so whenever the PGI happens, the FI gets updated with the COGS, and whenever billing happens, FI gets updated with revenue and the data. Okay, and the GST.
Correct.
But in case of COPA, it doesn't happen that way. It happens from the condition type, and the condition types are defined in the billing document. It is also defined in the order, but then the posting from condition type happens from the billing document into CO. So there will be is possibility of some difference between FI and CO. If you see those difference, then you'll have to take corrective measure to get it corrected before you finalize. So reconciliation for me is like, you are regularly keeping an eye on some of these parameters and then checking if there's anything going wrong and take corrective measure. Otherwise, if you set up the system right, it will work. There won't be any difference.
Thanks a lot, sir. Thanks a lot.
Thanks, Shankar. Okay, so I'll continue forward. So now the third part to this is provide strong governance on the transactions, and there are a lot of components of governance. But right now I'm just talking about the transaction part. Okay, so master data is a very key component which controls transactions. If you remember the hierarchy that I shown here, so master data has got a field status group that then controls the transactions, how the transaction is entered. Then there are validations, substitutions, and exits defined at the transaction level so that any data that is entered is validated by system automatically before it gets processed. And there are rules that can be set up in SAP, and which is very good for controllers to know, because controllers are not there when the transactions are happening. Controllers are looking at when everything has happened and it has finally flown into CO. So there are capabilities in SAP where you can control the transaction screens, control the data that is being entered, and the checks happen automatically in SAP. For example, for certain field, you'd like a specific business area to be entered. That can be designed so that if you've got three different areas, A, B, and C, for example, if some posting was to be done in A and someone is posted in B, now, of course, the A and B will show a different picture because the data entries happened wrong. And what if this happens for a longer period of time, then you keep on reporting wrong data. But with validation and maybe substitution and other rules, you can define what data will need to be entered in system, and system will do a check based on different parameters. For example, if material is X, then you would like to post it to A. If material is Y, then you would like to post it to B. And if instead of B, someone is entering A, SAP will stop him. So the data quality will greatly improve with a proper setup done at the transaction level, and which is part of governance. That when data is entered in the system, it is done right, because the downstream system then don't need to worry about the quality of data. The quality has to happen once, and it has to happen at the time when it is entered. When it is entered, it has to be the best quality data. Then the downstream reporting will not be bothered about the quality. It will then just analyze the data. Think of what happens if the data quality is bad and you have very sophisticated Tableau and data warehouse systems. It won't matter. It will give you still garbage out, because what you have entered is garbage. So it is very important to have the master data defined very well. In most of the companies where SAP is implemented, I have seen the customer data, vendor data, metal master data, they all go for toss. For the same material, you will see multiple metal master getting created. For the same customer, you'll have multiple customer or vendor master being created. And over a period of time, this creates problems because then you may not be able to do your analysis well. If you have got 3 metal master for the same material, how are you going to analyze consumption, or how are you going to analyze your profitability? So it is important that there is a proper governance mechanism which is defined at the master data, maybe through some processes or through some, there are master data governance suite or applications also available, product available that can also be used. Similarly, bill of material routing, cost centers, these are extremely important master data, and they have to be defined correctly so that there is proper governance down the line. And like I talked about transaction data, let me talk 2 or more 3 things about this transaction data. Transaction data, whether it is entered in FICO, MMPPSD, or any module, it creates a document number. That document number is unique in SAP. So it can be then traced. There's a audit trail available for all the documents. It is unique number and it cannot be deleted. So it can only be reversed. So because it can't be deleted, there is a proper trail available for you to see what has happened for the transactions. And since the document number is also unique, you can analyze data at the lowest level very well. Let me log into SAP and let me show you some of this capability which I talked about. So this is the client. So when I am logging into the system, I'm logging it with reference to a client. So what can be a client? If Tata Group is implemented SAP, they're not going to implement in Tata Elxsi alone or in Tata Motors alone. They're going to implement SAP across hundreds of companies that Tata Group has. And so the client sits at the Tata Group level. And within that, you'll have all the company codes which will have SAP implemented. The advantage is that you don't have to buy separate systems for each of these. You'll have just one system, one SAP, and you can create number of company codes, and those company codes will be accounting. And finally, like I had shown you in the PowerPoint, how we do the enterprise controlling, we can do it. And that's what I'll demo it here. So I'll go into a COPA report directly. And I'm taking operating concern. So operating concern, I'll take it IDES, IDEA. I'll take IDEA. Okay, so which would be akin to this. This is where IDEA is sitting right now. So I am at the headquarters and I am, as a controller, I am running this report. And I got large number of reports. These reports doesn't require a lot of technical expertise. It requires some training, but then it can be built using something called Report Painter. And now I'm just running this report across all the entire group. I may be at the a controller for Procter & Gamble, for example. So this is the income statement of that kind of a company, the sales quantity. You don't see this in FI, the revenue, the rebates, and then you get the net revenue. Now, this can change based on your requirement. So don't think that this is a standard and this is the only report. You can make hundreds of reports depending upon the requirement. And all this can also change, including the headings. All this can change depending on the requirement. But for now, I'll just carry on with this report and show you how we can analyze it from a business controlling perspective. So you've got good usage, merchandise, manufacturing cost, variable, and you come to your first level of contribution margin, this one. And then direct labor cost, fixed machine cost, production setup, all various production cost. Then you got the cost of goods sold and the contribution margin too. Then comes various variances. You see there's a big variance here. And then finally, the other cost makes it the contribution margin 4. The way you design the report, it is possible for you to also reconcile with FI depending upon how you design, what all pieces from finance you have missed out or you have not considered. So that way you may have to reconcile, or maybe you have to prepare an income statement, one income statement which will be a complete one-to-one reconciliation with FI. And at the end, you can then match it up with your P&L profit in FI with this profit. That way, the reconciliation can be done. Now, when I want to analyze this, I will come. Okay, before that, so this is the revenue at the group level. Now, I want to see the revenue by division. I can just move this places down, and I can get the whole contribution margin report by various divisions. So automobile, paints, okay, and this is the lightning. Now within lightning, I would like to see it by product. So it has got bulb. Let me see where is the biggest revenue. So no revenue have been booked at this level. Yeah, so you can see some revenue here. Okay, so this is the revenue. Which country is it happening? It is in Germany. So now, if you also want to see the document, you can get down to the line items. Double click, open this, and you go to a COPA document now. This is a, like I said, SAP will generate a document number at each stage. So this is the COPA document, and you can see various characteristics based on which you can do analysis. You can do analysis by customer, by product, by sales organization, by distribution channel, by division, customer group. It's a huge analytics that you can do or built on it from SAP data. And for that, this particular document, this is the revenue. And if I go to integration, I can look at the accounting document. So this is the accounting document that has been posted. It is in Euro. And this is the customer, and this is the revenue. We go to environment. And now you see, I'm now at the company code level. Within that company code, from the group company, I'm coming down to the company code. The posting date, a specific document. Okay, and this is the currency, Euro. Now, for that transaction, I want to see further detail. I want to see the original document that is posted to FI. So this is the billing document that is posted to FI. And you remember the order to cash cycle. Before billing comes the delivery, and before delivery comes the order. So we should be able to see even that. So there's a delivery and there's an order. So there's some part missing, but I can show you from here also. Some error. So never mind, let me show it to you in some other way. I'll start from an accounting document. So I can get down to the order. Hopefully this works. Let us see. So this is the order. So from order, I can go to the delivery to billing document to the accounting entry to the COPA. I can look into that into COPA, and COPA will then roll up all the transactions at the group level, and from where I can analyze the group profitability, or I can also analyze transaction level data. So from the group, I can get down to the transaction. So this is just one part, one capability of SAP that I am demonstrating in the paucity of time. But SAP has enormous capabilities from a controlling perspective. Each and every area has large number of functionalities and reports that you can draw out to make your controlling much better. Okay, so any questions you have? Okay, so if there are no questions, then I think we can close the session. And today is Sunday, so most of you will be having some plan in the afternoon, and you can enjoy your time. So good interaction. I will also share this on LinkedIn. Please get connected with me on LinkedIn through this, so that I can share with you, and also we can remain connected. So thanks all of you for your time on a Sunday. I hope you all enjoyed the session, had good learning within this 1 hour time, and I will also find some other opportunity to schedule similar session. If you got any suggestion for future session, please reach out to me. Let me know so I can schedule maybe what is interest to you could be also interest to others. So thanks a lot. Goodbye and have a great Sunday.